remember that incident when you typed a message ranting about your boss only to accidentally send it to your boss instead of a friend? Such fat finger mistakes are everyone's worst nightmare. And sadly, a trader made a similar fat finger mistake last Monday when he bought the Nifty at 16,500 while it was actually trading at 15,800. This trade momentarily freaked the markets out. It was an expensive mistake, but it certainly is an interesting lesson. And with many more such interesting lessons, Stockgro is out with the third episode of the podcast, Mind the Markets. So, are you eager to hear about the other freak events from markets last week? Listen in. On Tuesday, Tata Motors announced that there might be a 50% drop in the production of Jaguar Land Rover in this quarter on account of the chip crisis. This led the stock to flip, fall 10% and hit the lower circuit. Didi, a Chinese tech company listed on the New York Stock Exchange, saw a similar reaction after China banned the app for illegally collecting users' personal data. Its shares too fell 20% and are now trading below the IPO price. To make matters worse, China plans to further crack down on all the domestic firms listed offshore. Ugh! Are you desperately looking for some good news? Then here it is. On Friday, Bajaj Group became India's fourth family-owned business to hit $100 billion market cap, thanks to Bajaj Finserv shares which made a new high of 12,611 rupees. Finally, call it good news for Apple or bad news for Microsoft. The news is that on Tuesday, Pentagon cancelled its cloud computing deal with Microsoft, pumping its rival Amazon's shares up by 5%. Now, before we start talking about the exciting new IPOs like Zomato, shall we first understand what has been up with our economy? High-frequency indicators show that the economic revival after the second wave has been slow. In June, GST collections fell below 1 lakh crore rupees, a first in 8 months. And the service sector activity contracted sharply. The fact that the rating agency Fitch lowered India's growth forecast from 12.8 to 10% confirms these worries. On the positive side though, fewer foreign trips and education loans led to a $6 billion decline in outward remittances, creating a $24 billion current account surplus. However, there is one geopolitical event that may further hurt our economy. Saudi Arabia and UAE have been unable to agree on increasing the future crude oil supplies. This can lead to higher petrol and diesel prices, a major concern for the inflation-burdened average Indian. That brings us to the important question. Will Nifty cross 16,000 this week? Both Nifty and Sensex actually ended marginally lower on Friday at 15,689 and 52,386 respectively. They were in line with the global markets that were broadly negative on worries of Delta variant and inflation. While metals and telecom held the ground, bank and auto stocks saw some selling. Nifty is now bound between 15,400 and 15,900, even as Nifty tested the support at 15,635. To keep any hopes of 16,000 alive, Nifty must sustain above 15,700 and break the resistance at 15,900. Whether bulls can take back control next week depends vastly on how the markets react to the important macro data releases on Monday and Thursday. Finally, let's talk about this week's hot topic: initial public offerings. IPOs of Clean Science and Technologies Limited and GR Infraprojects Limited were subscribed an enormous 95.5 and 102.5 times respectively. However, the story doesn't end here because Zomato's $1.3 billion IPO hits the market on July 14th. In the grey market, its shares are already trading 20% above the IPO price band of 76 rupees. Stay calm, folks, because there are other exciting IPOs in queue like Paytm, Nykaa, Policy Bazaar, and possibly the biggest Indian IPO ever, LIC. So do tell me in the comments which upcoming IPO will perform the best according to you. And while you wait for your IPO allocations, don't forget to test your trading skills by signing up on Stockgro Leagues using the download link in the description below. Happy trading and see you next time.